Well, greetings and salutations, test takers. This is Dean Tenney coming to you from my studio here in fabulous Las Vegas. I always get asked to do certain lectures, and the lectures that I like, narrative lectures, is my thing. And I get every once in a while asked to do a laundry list lecture. I call it a laundry list, a list of things. I honor the request because those end up being more popular than what I think should be popular. So we did a very similar laundry list lecture on all the math necessary, keyword necessary. Every once in a while, I'll get somebody in comments that, well, you didn't put this in there. I didn't say it's all the math on the 7. I said it's all the math necessary for the Series 7. And so I always get asked to do something on percentages and how many days. And so I thought I'd knock that out for you. I don't think it lends itself well to lecture, but maybe what you want to do, we're going to go from percentages from small to large. Maybe you want to kind of hit pause and see if you know what the next percentage is. We'll do that, and then we'll do how many how many business days, how many calendar days. We'll play that game a little bit. All right, so our first percentage, let's put it in a different color, is 1/4 of 1%. 1/4 of 1%. If you want to sound like a player, you would say 25 basis points. And that 1/4 of 1% is the maximum 12B1 fee that a mutual fund could charge and still refer to themselves as no load. Hold themselves out, sometimes is how we say that, as no load. Right, and then over the life of the fund, the max that could be would be 3/4 of 1%, or 75 basis points, or 75 bips. Now, remember, you go past 25, you can't refer to yourself as a no-load fund, but you could, once you're past that, the next road stop is 3/4 of 1% over the life. Okay, so we'll try and change colors. We'll try and mix it up a little bit. Our next one would be 1%. Now, 1% could be, initially in a contingent deferred sales charge, a situation on a 12B1 fee for initially. But we should know that 1%, I would kind of know, I can't hint at this. It's like learning a foreign language. And so when you learn a foreign language, they say when you dream it, you know it. And so that would be 100 basis points. Or again, if, your tests are written, but 100 bips, right? So the difference between a bond paying 8% and 9%, a bond guy would not say 1%. A bond guy would say the difference between 8% and 9% is 100 bips, 100 basis points. I think of that as being, in a bond, and other things, it's other things, but in a bond, remember 1% of par is 10. So 100 dimes would be in that. We should also know that 1% is also, remember, going to be a factor when we're talking about 144. We can sell up to 1% of the outstanding shares. Let's put that in a different color. Or the average of the last 4 weeks trading volume, whichever is greater. I'm not going to do the or, I'm just going to do the percentages in order. So again, I'll leave it up to you to actually, set these up. So 1%, what's our next one? Our next one would be 5%. And again, what I would do is play the game. If you want to hit pause and say, oh, what do I think the 5% is? The big one is going to be the markup or markdown policy of FINRA. You should definitely know it's not a rule, it's a policy. You should know it only applies to the secondary market. So I can charge somebody more than 5% if I have a good reason for doing so, right? I would know 8.5%. I think I said it doesn't apply to the primary market, right? It only applies to the secondary market, that 5%. 8.5%, definitely testable. And 8.5% is the maximum sale charge in a mutual fund. I don't know of any fund that still charges 8.5%. The technical name for a fund that charges 8.5% is a full service fund, 10%. So 10% is a couple things are 10%. One, that's going to be the penalty for early withdrawal. Or that would be before you're 59.5. Again, we're not trying to do lectures here. This is just a laundry list. So, I'm trying to keep these things shorter. And if I go into a, full-blown discussion or lecture, then it's going to be, 2-hour thing. I'm got my timer set. I'm trying to bring this in at 30 minutes. We'll see how successful we are. Now, remember, you can always hit pause. You can always hit pause. The other thing 10% is for is maximum syndication fees in a public partnership. A partnership, DPT, direct participation program, that kind of thing. I'll keep it in the same color since it's 10%. I'm just checking my notes here on the things. I'm sure I'm going to forget something. You can put in the comments if you think I've forgot something, or maybe on a pinned comment or the video description. I'll, if I think something I picked. Remember, 10%, more than 10% makes you a principal stockholder. And that's important because remember, once you go past that, then you become subject to 144. And I would definitely know that, right? And the point is then you're going to be subject, you're an affiliate or control person. So 10% more, let's put it that way. Become a principal stockholder. And remember what that means is you become subject to insider kind of control person rules. The big one would be the 144, right? Okay, our next one would be 25%. Let's change colors. Again, what I would do is play the game of, do you think you know the answer to what is 25%? The 3 styles of test questions you get are recognition test questions. That's what the game we're playing now. These are just simply recognition questions, and you can't give up recognition questions. Practical application questions, that's like math. You can't give that up. And then there's judgment questions. So none of this stuff is a judgment question. You should know that this is minimum maintenance in a long account. And remember, that's not the not the Federal Reserve Board that determines that. That is the SRO, the self-regulatory organization. And the firm, if it chose to, could have a higher standard than that if they chose to, right? So 30%. You should definitely know that's minimum maintenance in a short position. And again, the house requirement can be a larger. I'll refer, and I'll put in the video description in a pinned comment, the other lecture that's kind of a laundry list, which is that math lecture, where I actually show you how to do practical application with some of the numbers, like market valued maintenance debit by 0.75, credit by 1.3. So I'll leave that. That's a different lecture. Here we're just going through the percentages. 40%. Sometimes you could get that as 60-40 or however you want to think of that, right? So the Investment Company Act of 1940, we want to hope that if it comes time to rip off the shareholders, at least 40% of them say, I don't think we should do that, right? So that's the minimum percentage of outsider unaffiliated board members, outside board members. I'll probably have a couple typos in here. I'm not going to let the perfect be the enemy of good here. So I'm not going to spend a lot of time correcting any typos I may make along the way. All right, 50%. A couple things are 50%. Right. So the big one, let's get a different color here. The big one is Reg T. Reg T is set by the Federal Reserve Board. And remember, that is what the customer has to put up and be at risk for initially, right? That's the Federal Reserve Board. That's part of 34. There's a couple other things. Whoop, I will correct that because that's we want to make sure that's correct. That's part of 34. Another thing that's 50% is the dividend exclusion. Well, let's stick with margin here. 50% And again, I'll use my little less than greater than sign. So this is going to be if our equity is less than 50%. So let's see, do I got the right thing for that? Less than. Our account is restricted. And in a restricted margin account just means it's below 50. And then remember, the rule is that you can only have half the proceeds. There's a retention requirement. You got to leave the rest in the account. 50% is also the dividend exclusion rule. You know, if a corporation A owns stock in corporation B, 50% of that dividend they receive will be 50% tax excludable. In other words, they're not going to pay taxes on half of the dividend they're going to receive. Okay, let's see. I'm checking my notes here, see if there's anything else I have for my 50% discussion. Well, that's also, remember, the other flip side of the 50% is the loan value, right? You should definitely know. Anybody want to guess what 72% is? The 72%, right, is making the mark, right? That's what you need to get over to actually pass the test, right? So let's see what else we're doing. Our percentages, and we're going to do how many days. So 72% is your minimum to pass. 90%. I'll stay on the same whiteboard. And we don't want to have it that big. Let's go smaller font. You should definitely know that the 90% is subchapter M, or the conduit or pipeline theory, right? And this says that mutual funds and REIT must pass through 90% of their net investment income. I think a good way to remember that is die 90. Whoop. Okay, what else is 90%? I think that's yeah, like I say, if you can go through this, you'll probably find something and then put it in the comment, and for other people can see. If you see something, say something, right? 100%. What would be 100%? 100% would be the flow through of profits and losses in partnerships, also known as direct participation programs. That's 100%. And let's put that here. And let's see, what else do we have in percentage? We have 300%. And again, the game I would play is, you know, hit pause and see if you think you know what these various percentages are. And that is the penalty, the maximum penalty financially under the Insider Trading Act of 1988. I would say, I'll call that civil. You want to try and get used to the language. Civil penalty means, you know, you're going to write a check. Criminal means go to jail. So. But you should know it's a criminal act. So, you know, under the Insider Trading Act of 1940, or excuse me, 1988. And you know what? I think I don't want you to walking away thinking write a check and do this. I'll just say it's criminal. It's criminal, right? Okay, so I think that's pretty much a pretty good laundry list of percentages we're held accountable for. So the other thing I wanted to do in this thing that I keep getting asked for, people keep saying, Dean, can you do something where you go over how many days or things? So let's do that. So our next little part of this lecture is our laundry list. I don't even know if I want to call it a lecture, is how many days are various things. And let's put that there. And again, you can play the game. We're going to try and do it in a somewhat orderly fashion. You know, we'll see how we do on that. And we'll try and do different colors. And so how many days? Same business day. Let's start there. The same business day is for a cash settlement. You know, there's regular way settlement, and then there's, you know, not regular way settlement. So, you know, sometimes, particularly at the end of the year, people want to do this to accelerate the process. We should know one business day, or T+1, I'm going to call it 1 business day, but you might want to put that as T plus 1, however you want to think about that. And T plus 1, remember, is regular way settlement for govies, U.S. government securities, and for option contracts. And then we'll do a different color. We got T plus 2, or second business day, 2 business day. I'm trying to keep this thing kind of in a format that makes sense. So we'll call that 2 business days. I think the better way to think of that is T plus 2. And T plus 2 is regular way settlement for corporates and munis. And like I say, I'm not going to take too much time to pretty this thing up. Okay, so let's see. So we got 2 days. Let's see what else we got. We have, remember, this is kind of interesting how you want to think about this, but customers actually get 2 additional days to settle up for trades. So they actually get T plus 2 plus 2. And so that means that customers actually get 4 business days. Now, we don't tell them that because we don't want to use broker-dealer money to settle their trades. But you can think of that as T plus 2 plus 2 or T plus 4. What we're saying here is, as a margin clerk, I can't really take action against you under Reg T as a customer until you've failed, and you haven't really failed until T plus 2 plus 2. So, maybe I'll make a bigger note here. What we're trying to say here is that clients get 2 additional days to make good on trades. And as I said, we don't really want to tell them that because we don't want to use our money to settle their trades. But I'm trying to keep it in the same format, so I'll call that 4 business days. I would know that there's within 3 business days. Look like I'm out of sequence here. I don't know if it's worth doing it. I think I will. I think I'll go back, and I want to put within 3 business days. And that is for ACAT transfers, to transfer the account. We validate, and then we have 3 days to actually accomplish that. So I'll put that there. I'm trying to keep it in order. That's worth, I think, a thing if you want to screenshot or you're doing something like that. Okay, so that means I got to put back my 4 days. And or that's Reg T settlement for customers. Customers get 2 additional days to settle trades. So T plus 4 customer to meet that margin call. Okay, so we're going through how many days, and these are business days, but we also have some calendar days, right? So there are some things. Let's put this here. Let's label this business days. And I said I wasn't going to mind my typos, but I will. Okay, let's put that in a different color. Let's put that over here. Let's box that. And let's put a line here. And so now let's talk about calendar days. And there's plenty of room here. Okay, so on calendar days, we have 15 calendar days. Some of these things are more testable than others. And again, the game I would play is, do you think you know what it is based on, Dean filling this thing in? Oh, God, we need a bigger font than that for sure. 15 calendar days. So what is that? Very testable. That's when the customer has to have back from us, remember, that option agreement, that signed option agreement. So that's for the option agreement. And then remember, if that's late, then they're only going to be allowed to do closing transactions. These ones are pretty testable. So, you should know these recognition flashcard questions I'm going over. A lot of these are pretty high probability. So 20 calendar days, again, the game I would be playing is, do you know what the 20 calendar days is before Dean fills it in? And the 20 calendar days, remember, is the cooling off period, the minimum, right? We make our registration statement with the SEC that we intend to sell brand new securities to the public. And then that cooling off period is a minimum of 20 days. We have 30 days, 30 calendar days. And again, the game we're playing is for you to tell me what you think the 30 calendar day is about. There's a couple test questions on the 30 calendar days, so they could come up with 2 or 3 answers here. This is the wash sale rule, right? The IRS is going to disallow the loss if you reestablish that position. Let's fix that. It's also 30 days, also for how long it's considered a new issue. Remember, we're not allowed to lend you money to buy new issues. I could have put that actually in the 100% category, that you got to pay in full for options and for new issues. It is considered a new issue 30 days from the effective date. And that, remember, means you can't buy open-end mutual funds on margin, but you can use them as collateral if you've had them fully paid for 30 days, right? So the couple 30-day ones there, a couple 30 days. 60 calendar days. 60 calendar days. Again, that's high risk. The 60 calendar days, remember, is if you take possession of your assets, and that'll be a rollover. From you take possession of your IRA, for example, or your 401k. You have 60 calendar days to put that back in the appropriate spot. 90 calendar days. 90 calendar days. Again, there's a couple 90 calendar day ones. This would be the maximum back date on an LOI. This would also be how long the Form 144 is good for. Or when you're going to file the form, and remember, to file the form, you can sell up to 1% of the outstanding shares, or the average of the last 4 weeks trading volume, whichever is greater. And let's do how many months. So we have how many days, we had how many days, business days, how many calendar days. So let's do one more section here in this little laundry list. And let me get a proper font here. How many months? And so how many months? We have 6 months. Well, first we should probably do, well, I'll do it differently. I'll go the way I'm going to go here, and then I'll finish up with something. Anyway, 6 months is how long you have to hold restricted stock, right? So 6 months, there's other hold periods, but 6 months is the hold on restricted stock, red letter stock you receive directly from the issuer. So part of removing that restriction is to have held it for 6 months. What else do we have for 6 months? I think that's, I'm sure, like I say, when you watch this, you'll probably come up with some. 13 months, I definitely know 13 months. 13 months, again, the game you're supposed to be playing is, do you know what 13 months is? Remember, that's how good the LOI, the letter of intent, is good for, right? So let's just make one more category here as we finish up what I hope is helpful. Again, it was a requested kind of a thing. So the other thing that I want to just talk about briefly, and this we're trying to bring this in 30 minutes, is things that are monthly things that are quarterly, right? So one thing that's monthly is an account statement if it has a penny stock. So let's put penny stock account statement, or that would be a non-NASDAQ stock under $5. What else would be a monthly thing? Ginnie Mae's test question, pay interest and principal monthly. They're the only ones that do that, right? What would be quarterly? So let's put what would be quarterly. And again, quarterly would be statements, account statements. Again, let's put for test purposes, stocks would pay dividends would be a quarterly thing. So just be careful on the test if they say it has a quarterly dividend of. So dividends, you know, not all stocks pay dividends, but they do. They're typically quarterly. What would be some things that are semi-annual? So semi-annual, let's put that up here. Semi-annually, bonds pay interest. Would be semi-annually. Oh, by the other thing I should have put under quarterly is 10Qs. Those are the quarterly statements from a publicly held company, right? They file those 3 quarterly statements and then an annual statement, right? Annual would be the annual reports, would be from a company as well. And so annual might be those 10K, that's an annual report. And I'm sure you could probably think of some more things to add to this list. If you do, put it in the comments, and you know, if we get enough collected, we'll just go ahead and do another one, right? So let's see. Let's check out my notes, see if I forgot anything that I wanted to discuss. As is typical, I'll probably hit the button here and I'll realize there's some things. But anyways, I think that's helpful. That was the request. I'm fulfilling that request. So I'll see you next time. Remember, inch by inch, your exam is a cinch. Yard by yard, your exam is hard. Bye-bye.